Hey, happy Friday, everybody. Welcome back to Swan Signal Live. We've got a fun and friendly guest on the show. I meant to say a friend of ours, but she's also very friendly. Lyn Alden, author of Broken Money, all-around legend. And I guess you have another book dropping, Lyn. Is it about Bitcoin?
Bitcoin's in it. It's sci-fi. Yeah, I figured I'd do a curveball out there.
That's amazing. Yeah, I've had the pleasure to have a read of it, and it is absolutely fantastic and riveting. It's going to make an amazing movie. I am sure it's going to get picked up, and it's going to be fantastic. So get excited. A novel from a sci-fi novel from Lyn Alden. It's going to be pretty awesome. Well, welcome back to the show. It's been a while since we had you on Swan Signal Live, but you've been on many times, going back to 2020 when the show started. So it's awesome to have you back.
Yeah, always happy to be here.
John, what's going on, man? Happy Friday to you.
Happy Friday. I would not have been able to do this on Monday, Tuesday, or Wednesday. If I seem a little bit out of it, it's just because I'm recovering from the flu. And first time I had the flu since 2007, like the actual flu. And I forgot how brutal it is. It's literally one of those things where it was like, going to the bathroom, walking there feels like Mount Everest, climbing Mount Everest. And you're just like, I did things before the flu. Like, I made myself a sandwich. I was capable of that. Like that's what the flu makes you feel. But yeah, the fact that I'm able to stand up and talk is big progress. So pumped to get into it today.
Yeah, I'm glad you were able to make it in for this one too. All right, well, let's just dive in. We're going to go through, as usual, the news of the week, and we'll see where that conversation takes us. We'll dive right into the conversation or the topic of the week or the last couple of weeks. And, really, it's always a topic of conversation. Bitcoin price. We are down 25-ish% from the high, hanging around 100K. And, there's a discussion, of course, whenever we have pullbacks like this. Is this the pullback that begins the bear market? Or is this just another pullback on the way up to a new all-time high? Let's take a look at a couple of projections here from the interwebs. Alex Thorne at Galaxy Digital revising his end of year target to 120K. So it was previously 185K. It's a pretty safe revision at this point, just 2 months away from the end of the year. I remember, John, I think you were at this dinner in Miami for New Year's, and Alex and 10 of us or something going around the table giving our end of year predictions, and we were all extremely way off. We were overly bullish, drinking the Kool-Aid at Sailor's house.
I think we get to be forgiven in that environment at that moment in time. We were just ultra bullish, and it looks a little silly in hindsight. And hey, there's still almost 2 months left to the year. Let's make sure we point that out. I think there are some idiosyncratic things keeping the price down at this moment in time, and some of those things might alleviate themselves in the next couple months. But either way, I think some of the predictions that were at that table are going to be laughed at regardless. But it is funny just because, like you said, Alex was at the table. He has officially revised his forecast, and that is one of the news items that we wanted to highlight this week.
JP Morgan is setting a target of 170K in the next 6 to 12 months. This is your old stomping grounds, John. So what do we think of these numbers? Lyn, I'll toss it over to you. What's going on right now? Do you see some other indicators or vibes that we maybe have started a bear market here?
So I don't think we're in like a full-on bear market. I think we're obviously in a weak portion of the cycle, and Bitcoin has been roughly flat for 12 months now. It's kind of had a lack of catalyst. It's kind of one of those things where it gets ahead of itself for a period of time and then corrects. And some of those corrections go on for 6+ months. This one basically went on for 12 months, even though there were new highs along the way. I've kind of been in the camp of always kind of being a bearish bull, which is I try to avoid price targets, more focused on direction, because you can't necessarily predict like illiquid moves and kind of euphoric periods or kind of lack thereof. But when I do get kind of cornered into giving a price target, I think one of my main ones was 150K for this year. So it looks like we probably not going to touch that, but like John said, we still have 2 months to go, so we'll see what happens. And so that's like, we hit 125 or change. I had a similar thing last cycle where at first my target was $1 trillion market cap. which was somewhere in the ballpark of 50K. We touched that. And then I gave a target of, I think we'll hit 100K. That was still lower at the time than many of the bulls. We ended up not reaching that. We ended up only getting to 69. So far we're kind of in a similar thing where we kind of hit initial bullish targets, new highs and all that, but then kind of stagnate a little bit. I generally wouldn't look too much into this whole kind of 4-year cycle aspect. As the halvings continue, the new supply is a much smaller component of the total supply and demand out there. It's more about what price will unlock coins from existing holders, either because they want to sell into bullishness or because they're selling into weakness. They're afraid of their position. Either one. That's the type of thing that can really kind of affect price more so than what is the kind of the rate of new coins hitting the market at this point. In addition, prior cycles, because it was a much smaller illiquid market, and with kind of in general on average less sophisticated kind of participants, not necessarily in terms of like intelligence or anything like that, but in terms of hedging, in terms of kind of how they tend to rebalance and stuff like that. We had kind of more non-financial people involved, basically people that are sophisticated in other areas, not in terms of like sort of portfolio management. It didn't really follow normal rules of assets, whereas now that it's kind of held by those who tend to hold other assets, they tend to treat it like they do other assets, which often results in rebalancing and things like that.
Yeah.
And so in prior cycles, like the market cap would get way ahead of the on-chain cost basis. And so it kind of like some of that price spike would be ephemeral because it's like it didn't really reach that price on a sustained basis. It was just kind of like a small number of coins would then, when you extrapolate over the whole market cap, kind of say this is the current price. But it wasn't like a price that was kind of a very illiquid price. And so I think we're past those kind of periods of just massive disconnects. We still have the on-chain average cost basis inching up at this phase. So I generally think that while it's been weaker than expected, I generally view that the cycle is going to go on longer than expected because I think we're driven by other things, ranging from regulatory actions, ranging from liquidity, ranging from all sorts of other things, fiscal, economic stuff, and very much less so to a nearly negligible degree the supply halving cycle.
John, any reactions there? Are there any macro vibes out there that, like, I'm channeling Steven and Vibes Capital Management? Are there any macro vibes out there that you think are kind of affecting your expectations?
Yeah, I think a couple of things come to mind. One is speaking. I think Steven said this on Twitter. He said JP Morgan is more bullish on Bitcoin than Bitcoin Twitter is on Bitcoin, which I think is a funny and true observation at
As
this
we
point
saw
in
with
time.
the 170K.
Exactly.
Yeah.
Excuse me.
Yeah.
So yeah, that's what he was referencing there. And I think, Lyn, this is something you have said in the past. I consume so much Bitcoin content, I often forget who said things, but the kind of disconnect is largely attributable to reality versus expectations. I think if you surveyed most Bitcoin enthusiasts, whatever you want to call us, at any point in the last 12 months, most people would have thought the price was going to be a heck of a lot higher than 102K in November of 2025. So that disconnect between reality and expectations, I think, explains a lot of the sentiment. Lyn mentioned a valuation metric, and it got me thinking about this, which is when I look at a whole bunch of things that in hindsight did point to or predict or just precede the 2022 sell-off, and which again in hindsight was a 2021 of November peak in the Bitcoin price of 65, 68K, whatever it was. If you look at things like the rate of inflation, CPI, rate, where interest rates were going, where central bank balance sheets were going, where M2 money supply was going, the magnitude of US deficit spending as a percentage of GDP, valuation, Lyn already mentioned that, and a few other things which maybe we'll get into. But all those things I just listed, when I look at them, none of them are doing what they were doing in late 2021 or early 2022. So I think there's kind of two things that are on most Bitcoiners' minds right now. One is like, hey, why are we chopping sideways? But then the next question is, did we peak at 126K? Was that the peak of this cycle, quote unquote? And I have that on that second question, I feel pretty confident that was not some sort of peak of a cycle. It just doesn't look anything like the last peak in terms of all those different metrics that I mentioned. Yes, I do think market structure is a little bit different this time. I don't think we will get to as exaggerative of a peak as we did in November of 2021. But man, I will be absolutely shocked if 126K in early October of this year is some sort of peak of a cycle, meaning defined by like I'm of the belief that we're going to overtake that peak at some point in the next 9 months. But curious what you guys think about that too.
I mean, I think, I do not think the bull run is over. I do think it's going to extend. I think we're in a period now. It's just going to be different. It's it's a much larger asset, or at least it's more exposed to much larger pools of capital, to much more sort of advanced money managers and finance types, and that I think will mean kind of when price runs, it'll be, like Lyn was saying earlier, you're going to adjust portfolios, you're going to rebalance, things like that. And I think that it's just not going to be, it's not going to be affected by halvings anymore. I think cycles were affected by halvings to pretty great extent, especially like progressively less, but enough. There was enough new coins being issued that it sort of affected the supply demand dynamics. And I don't think that that's really the case anymore. The new supply coming out is so small relative to the size of the asset now. So I think we're at a point where we're not going to see 80, 90% crashes anymore. There's enough big money on the table to snap that stuff up, that's smart money, to be able to say, okay, this is at a 30, 40, 50% discount. This is a great time to buy, as opposed to retail investors who will tend to panic and stay panicked and just become increasingly panicked during a move like that. So I think there's a higher floor now than there used to be, probably a higher ceiling as well because of those types of dynamics like rebalancing, etc. And I also agree that there's macro conditions that are positive, promising for Bitcoin continuing to suck in fiat. Liquidity's rising, interest rates are dropping, and Bitcoin's made this whole run in a macro environment that's been, considered, I think, in a, like well-founded way, to be an environment where you wouldn't expect Bitcoin to do so well. So now that we're kind of going out of the QT environment and into a more QE environment, I see a lot of money potentially coming into Bitcoin from just those dynamics alone. So I don't think it's over. I think we're going to kind of grind for, the foreseeable future, unless there's some kind of like hyperinflationary event or some kind of huge geopolitical event or something that would drive, Samson Mao's Omega candle or something. I think we're in a world now where price is just not going to be as fun or as terrifying to watch.
Yeah, I think an example to be familiar with is the Mag 7 stocks. Basically, these really kind of mega cap US tech stocks over the past 15 years. For a lot of them, if you ask, what cycle were they on? I mean, not a
Yeah.
particularly, specific cycle. And the booms and busts were muted, because they started from a larger base than Bitcoin was, 15 years ago. And they've gotten, some of them to a larger market cap than Bitcoin is now. And they've traded in traditional markets, and if you ask people, before, the idea of $1 trillion company was, an extreme thing, and now, companies have been over 4 trillion. I think Nvidia might have touched 5. I'm not sure, but several have touched 4 at this point, and more have touched kind of 2 and 3. And so a lot of these companies over the course of 5, 10, 15 years reached heights that most people did not expect them to. And they just kind of kept like every time they would say, okay, this price to earnings multiple is a little bit high, or this is kind of concentrated. For a period of time, it might cool off for 6 months or 12 months, and then it just has another rip higher. because it's fundamentally being adopted, whatever kind of product or service they had. And I think Bitcoin's kind of in that phase now where, there are some bears that are saying, 2 trillion market cap, that's kind of enough. How could it possibly go higher than that? It's magic internet money. How could it go higher? Kind of like how could a phone company, like Apple, how could that get as high as it is, or how could an operating system company like Microsoft get as big as it does, or um, and I think basically over the next 5-10 years, it's going to kind of behave like that, where it surprises bears to the upside, where it just gets bigger and goes on for longer than they think. Um, but it doesn't mean that basically bulls are going to be entitled to 5x multiple gains in like a typical 12-month period. It's not on that kind of easy 4-year clock as it was for a period of time. And I think even the 4-year cycle, and I've done research on this, um, the last couple cycles, it was kind of a blend of the halving cycle and the liquidity cycle. And so as basically we have the kind of the importance of one declining to the point where it's almost negligible now, and then those other factors kind of gradually increasing in prominence as they affect Bitcoin's price.
And on that second group of factors, Lyn, would you agree that these kind of more macro liquidity driven factors, things like CPI inflation, Fed interest rates, central bank balance sheets, M2 money supply, US federal spending as a percentage of GDP, do you think those are kind of some of the core macro factors that are going to be affecting Bitcoin? And then if so, what's your forecast for whether those particular items are going to be generally supportive of Bitcoin's price, or the opposite?
Yeah, so I do think factors are the key drivers. Basically, the type of things that drive a lot of high quality assets up, or put kind of near term pressure on a lot of high quality assets. Various things related to the hardness of money, liquidity, that kind of thing. A lot of the factors you cited, and then as you pointed out, I mean, unlike 2022, we don't see a major contraction in a lot of these things. Instead, some of them take a pause for a period of time. Others are still accelerating. And so I expect the numbers to be pretty good in 2026 and 2027. I think we're ending the period of Fed balance sheet contraction. We're entering maybe a flat period for a period of time, and then most likely expansion for a while. I would say not at the rate that some people think. My general view is that we're not going to get some massive QE anytime soon, but that instead we're going to return to a period of kind of structural balance sheet increases at a moderate pace, and that over the kind of longer term is beneficial for a lot of assets, including Bitcoin. Um, and it's more the persistence of it, kind of the length of it. And I think another factor that kind of weighs it is that because we have a two-speed economy or K-shaped economy, depending on how you want to refer to it, that impacts financial markets too. I mean, we've had kind of a two-speed asset market, which is if you're one of the big mega cap tech stocks, or gold or a handful of other assets, you've done amazing. A lot of mid-level companies just kind of chop it along. Um, and in this particular cycle, we have not really had retail investors show up. So you don't see, for example, Google Trends searches for Bitcoin not doing particularly amazing. A lot of the demand this cycle has been on that more institutional side, which includes, higher net worth retail investors as well, and including, of course, some retail investors. But it's not a very retail driven market like prior cycles generally have been. And that's in part because a lot of retail investors are strapped for cash at the moment. There's not, a lot of them are financially struggling because we have kind of an economic malaise. Kind of the one thing that does look pretty negative for asset prices, but it's kind of the era we're in, is low consumer sentiment and business expectation sentiment. So a lot of the kind of the boots on the ground stuff is pointing toward weakness. And I would say the key reason for this is fiscal dominance, which is, for the most part, if you had consumer sentiment this bad, it would look like a recession. So a lot of these other things would also be rolling over. But because we have fiscal dominance, we get an unusual separation from things like purchasing managers indices or consumer sentiment, these kind of real time gauges of the economy, while asset prices can kind of levitate. And that's in large part because of fiscal deficits. And I think that that's kind of a structural thing that we're in now. And so you get kind of pockets of weakness and pockets of strength. and just kind of ebbs and flows along that kind of run it hot floor.
Do you think that there's any risk of, well, there's always a risk, but what level of risk do you think there is that the U.S. is, facing some kind of major market downturn, the recession, I guess, a recession period.
Well, there is substantial evidence of a downturn, so much slower job creation, and kind of potentially early signs of job losses. Nothing particularly confirmed, but kind of some alternative data have pointed in that direction. Um, I think that as we kind of fast forward some period of time, I think we'll get through it. I think that these types of recessions, I've been using the term emerging market recession, which is to say recession feels different when you have fiscal dominance. So by some metrics, 2022 was a recession. If you look at the misery index, it hit recession levels. If you look at bank loan tightness, kind of their unwillingness to make loans, like senior loan officer surveys, that reached levels you only see in a recession. But it was offset by some of these other factors, kind of the fiscal deficits that had shrunk but were still large, as well as kind of backlog stimulus still working its way through the system. You had that kind of recession without a recession. Basically, what you didn't get was the labor market rolling over. You had a lot of other factors, and I think you're generally finding something now, which is you have consumer sentiment is already at recession levels. Uh, Purchasing manager indices are not at recession levels, but they're kind of at stall speed levels. Um, and we still have signs of weakening. Now, as the Fed lowers rates and as fiscal deficits remain elevated, when we look forward, I think we'll grind through this and probably have another reacceleration cycle. Um, but yeah, I think the next 3 to 6 months are kind of shields down. There is a lot of weakness materializing, and then there are some Boolean outcomes. One of the things I'm watching from macro sense is the Supreme Court's decision on tariffs, because kind of like how years ago you say, okay, they're going to do a stimulus or they're not going to do a stimulus, like another round of stimulus, because that is a macro implication either way. Um, Basically adding tariffs or taking tariffs away is a type of stimulus or headwind on the economy. And so it's basically a $300+ billion swing variable that we're going to have to see what happens with, as well as things like the government shutdown and other factors. So there are these kind of if else
Mm-hmm.
decision points. So I say if the tariffs remain in effect, you probably do get a little bit more continued headwinds. If you take that away, it's not a magic bullet, but you do get basically a mild stimulus on the economy, in addition to the Fed rate cuts. So those are some of the variables that I'll be kind of watching to determine the likelihood of how weak we might get.
Yeah. So the possibility is not small right now. Like
Yeah.
there's a decent chance. That makes sense. Um, John, I have another question, but it's a change of topic. Did you want to follow up there?
Are you sticking with macro, Brady? Or are you changing it to
Yeah, I was
something
going to
totally
ask
different?
about the Fed chair and what's going to happen in the Trump administration
Yeah,
next.
let's go there.
Yeah. Yeah. So what do you think about, Trump wants to drive down rates faster. He's been putting a lot of pressure on Powell. There's a new governor that Trump likes on the board. What do you see happening next year with the Fed chair?
So I think that Powell will, his term as chair will end. It'll be up to him whether he stays on as a governor.
Mhm.
I generally probably he'll not remain on the board given the environment. The latest appointee, Stephen, it's either Meehan or Myron. I always see it written. I've heard it spoken different ways, so I'd have to apologize to him. He has been the dove of the group as of
Yep.
late. And I think that actually speaks to the prior point, which is Trump's own appointee is now pointing toward labor market weakness as a case to be dovish, which you generally wouldn't see from the rest of the administration. So it's kind of it's interesting to see what's happening. But I do think he has a point, which is basically that the Fed's in an awkward position where inflation, as they measure it, is still above target, and yet you have other signs of weakness. Kind of historically the hardest thing for a central bank to deal with is stagflation, because if they get an outright deflationary crash, then they combined with fiscal can print a ton of money, and it has consequences. But because you have all this deflationary action, they can generally are able to do it. On the other hand, if they have inflation and things are running hot, they can, they can make it harder to borrow. They can kind of tighten everything. They can harden the exchange rate compared to other currencies, slow things down. But when you have both kind of sticky inflation and weakness, that's less of a Fed purview. That's kind of outside of their toolbox, especially when it's largely driven by fiscal deficits. I keep pointing out that the inflation is not because of excessive bank lending. It's because of above normal fiscal deficits combined with some other things, kind of a slowdown in globalization and things like that. Um, and so I do think that we're going to get an ongoing, mildly dovish Fed. I think we'll get, a little bit more people like that new Fed governor in, Myron or Myron. Apologies to him again. Um, and I think we'll have more like that. I think we'll get a gradual realignment toward a moderately more dovish Fed. But that is still, I mean, he has credentials. They just tend to differ from the normal pathway from other governors.
And while we're sticking on kind of macro Fed type stuff, what do you make of this narrative, Lyn, that people generically refer to Bitcoin as this liquidity sponge, right? We often hear that, and I think there's truth to it. What do you make of the fact that this stress in liquidity and repo and funding markets, plus the fact that the TGA is building up a balance, could that be affecting Bitcoin's price? And by the way, for any listeners at home, TGA is being built up pretty significantly due to the government shutdown. Do you make anything about this actually being a short-term drag on Bitcoin's price in addition to these other factors that we're talking about?
I do, and I would say that those two things are themselves related. So you mentioned repo plus the TGA fill. I think the TGA fill was one of the variables that contributed to the repo stress that we've seen. And for listeners that don't kind of follow it, the Treasury General Account is the Treasury's cash balance that they hold at the Fed. It's like the federal government's checking account, and it's basically a void of capital that's not currently being used. They've issued bonds to bring in that capital, but they haven't spent it yet. And normally they hold a balance. They currently target around 850 billion. It generally goes down very low when they're under like a debt ceiling issue, and it rarely goes higher than their target. And so when they filled it up, it's actually negative for liquidity because it's kind of sucking it out of the financial system. They're basically issuing more bonds than they're spending back into the economy. So they're kind of pulling capital into this void where it's not being used, which means it's less elsewhere where it could be used. It could be levered. It could be used for all sorts of purposes. And so they now combined with the fact they were already doing quantitative tightening, so they were reducing their balance sheet. They were getting close to their target levels. So the Fed has published research on this. They are basically trying to reduce excess reserves down to some place that is not super scarce, but that they call ample. So instead of abundant reserves, they don't want to get scarce reserves. They want to bring them down to ample. They're roughly in the range where they defined it as ample. Now, the types of things we're seeing now are supposed to happen under a scarce reserve regime. So some of these things that are happening with repo are not shocking. And I've written about it in my research reports, kind of predicting around this time we start to see it. I think it's a little bit front loaded. So things that could have been happening mildly here and mildly in early 2026 are happening more moderately here in late 2025 because of this TGA fill. So you pull a little bit more capital out of the system than they expected to, which kind of strained an already semi-tight system and cause some of this. Now, some of that repo activity seems behind us at the moment. We're probably not going much higher on the TGI. I could be wrong on that. We've seen kind of this pretty sharp repo activity go back down temporarily. And I think that the Fed's going to. They already announced that they're going to end their balance sheet reduction, and then potentially shift toward expansion. And so I do think that this is like a mild stressor on Bitcoin and other risk assets. And I do think it goes away in 2026.
Yeah, agreed. And I was just pulling up a chart of the TGA as you were speaking, Lyn, and it basically went to massively high amounts during COVID, which is understandable. The Treasury was issuing tons and tons of bonds at the time, and then it kind of got spent down throughout 2020 and 2021 to very low levels. Then it got refilled in 2022. So this kind of Treasury General account, it's definitely a macro variable to watch, and I think it does affect Bitcoin and other risk assets in the short term. So yeah, I am of the belief that this is one of the things keeping Bitcoin's price down in the short term. And as I think as Lyn said, but the expectation is that this should not grow. The TGA balance should not grow too much more once the government reopens. Nobody knows exactly when that's going to happen, but I don't think anybody's forecasting it to go another 3 months. It's likely within the next few weeks.
Have we passed the duration of the shutdown during Trump's first term? I think we might have passed it at this point. I think it was 29 days. We're well past that now, aren't we?
I believe so. Did we have one longer than that, though? I think this might be the second longest or something like that. I haven't fully tracked it.
I think, if I remember correctly, there was a longer one, but it maybe was not under Trump. Or did he have 2 shutdowns in the first term? He may have. It would make sense. It's it's like a very Trumpian tactic, right? Like, it's just, I don't care. Let's just shut it down. I don't care at all. You just have to give me everything I want because I don't care.
Yeah, it looks like some sources are saying that this has become the longest.
Okay.
And I wrote in a research report initially when it was just starting. I was like, okay, the first month or so, it's not a huge macro impact. Obviously, it impacts individual lives, but it doesn't. The things I look at in a macro sense, all these big numbers, capital flows, asset prices, not a huge variable for the first 2, 3, 4 weeks. When you go on longer, you start to get into unprecedented territory. That's when it can kind of re-enter as a macro variable. So a couple weeks ago, with my kind of prior report, I was like, okay, now we're actually entering a phase where some of this, whether in terms of at the time the big discussion was food stamps, how that can impact certain spending patterns. One of the latest is that we have flight cancellations because of more acute shortages in people running the air traffic control system. So we are at the phase where some of these things, as they keep stretching on, do have impacts on the economy and potentially asset prices. Also, the SEC is partially shut down as well, which impacts all sorts of things. So the combination of all these things together is, in addition to tariffs and in addition to just kind of general uncertainty, is in multiple ways weighing on asset prices and the economy as a whole.
And in case you want to go to the betting markets, which seem to have a decent degree of accuracy, Polymarket, I guess they blend these bands together. They show predicted as being November 18th, which would be 48 days shut down. But then they drill in, and I guess the things you can bet on are, will it be November 16th and beyond, or will it be the 12th to the 15th, 8th to the 11th, or 4th to 7th is the last open category. And it's distributed between those bands, but the most, I guess, likely based on how people are betting is the November 16th plus. And I guess they blend it somehow to get November 18th as the likely date to reopen. So we'll see if that ends up being correct, but that would obviously be another 10 or so days.
Yeah, and that's a pretty high volume market as well, as I look at it now. A lot of some of these things you see on Polymarket, you have to kind of adjust for volume. If there's 3 people betting on it versus billions of people betting on it, and this is one of the higher volume bets out there. So probably some signal there.
Yeah. Okay. Anything else on macro, John?
I don't know if there's anything else macro wise. Maybe I thought there were a couple interesting things to talk more. I mean, in a sense, everything is macro. But this Jordi Visser piece, Bitcoin's IPO moment, I'm curious if you guys have any interesting takes you want to share on that. And definitely relatedly, Checkmate had an interesting graphic where he showed this idea of revived supply, which is changing hands. These two concepts are obviously very related. So maybe we can get into this a little bit. Brady, do you want to preview it, or it doesn't matter to me?
No, please do.
Okay, so this is Checkmatey on Twitter, as you guys probably know him. So he has been doing on-chain analysis. He also gets referred to as Check on Chain. He's been doing on-chain analysis for a long, long time. And he put out this post on Twitter X recently and pointed out just the large amounts of Bitcoin that, and remember, this is when they move on chain. It's not, people don't you can't observe just on the blockchain that someone is definitively selling Bitcoin, but you can make some assumptions about what they're doing with it. And then you also say, okay, when did the last time the Bitcoin moved before that? And you can turn it into a nice looking graph. So what you can see here is the revived supply by year just dramatically increased in not only 2025, and actually one of the things that stood out to me was how big this was in the year 2024. If you would have asked me to just guess, I would have thought, and maybe I'm leaning too heavy on the Twitter narratives right now, but if you go on Twitter, every other post is about some OGs selling and suppressing the price, right? Or not suppressing, but just being a drag on the price. And the data that he's put together does reflect that in 2025. But I think it's interesting that in 2024 there was a massive amount of selling as well. And for anyone just looking at the colors here, so he buckets it. If it's the purple bucket, it's coins that are moving for the first time in over 10 years. If it is blue, it's coins that are moving for the first time in 7 to 10 years. And then green is the first time coins are moving in 5 to 7 years. So this is meant to be like old coins moving. And he calls it total 5-year plus revived supply. And the total is 52 billion in 2025. And it was actually slightly higher for the year 2024. But anyway, I thought it was a good chart, nicely done by Checkmate. And I think it does reinforce this narrative of there is a huge rotation of longer term holders. We can all debate what it means to be an OG, but longer term holders appear to be diversifying, selling, whatever they're doing with it. But that does seem to be a drag on the price. And then it also gets into that Jordi Visser article that this is reminiscent of what it means to be an IPO. Earlier investors took big risks in a company. The IPO, initial public offering, is other people, more distributed investors and holders coming in to hold that investment. So his article was shared very, very widely on Twitter and elsewhere. So just wanted to bring up those 2 points and chat about it with you guys a little bit. Any takeaways initially just from kind of seeing that data, or if you read that article, Lyn? Do you think this is a narrative that does hold weight in terms of affecting Bitcoin's price?
So I think significantly yes, but I would have some caveats. So one is like in that chart you showed, one of the challenges, of course, is that's in dollar figures. And as Bitcoin gets much larger, of course, the dollar figures for almost everything are going to increase. And if you notice, like the spikes were during major bull markets. So 2017, then 2021, and then 2024. These were kind of periods of major new highs. And what happens historically, we have kind of data of this going back to like 2011, kind of every major bull cycle in Bitcoin's history, is that you get selling pressure from longer term holders when you're kind of reaching new highs and that there's plenty of liquidity to sell into. If you try to sell into a weak market, you get a lot of price slippage. If you're a meaningful whale and you're trying to sell, you generally want to sell into a bull market to kind of sell, and your coins are easily bought by new buyers. Um, I do think that the narrative like the IPO is correct, but it's not unique to the cycle, which is to say that there's some aspects unique to the cycle, but basically you do get that kind of gradual distribution from very early adopters, much like a startup company becoming, a publicly traded, widely held entity. And basically, the difference is that Bitcoin is not a security and it's always been public, but you still get that kind of same sort of investor behavior where you get, kind of super high signal early adopters, and then you get kind of people coming later. They've seen more patterns of it. They've had time to kind of analyze it. They have less explosive upside potential, but also generally less risk by the time that they buy in. And one way to kind of capture this is like people that have been holding for many years are often up 5, 10 times or more, depending on how long they've been holding. It could be many times more. Many of them have, they've aged a number of years. Many of them have families that they didn't have when they started hodling. Many people want to just upgrade their consumption patterns. Some people get nervous by having, what has grown to maybe 90% of their net worth or more in an asset, and they might still love the asset, but they might say, well, there's no other asset I'd even put 10% of my net worth in. I got 90% of my worth in this one. Maybe I want to go down to 50. So I'm
Yeah.
still bullish, but maybe I'm not, betting the farm anymore on one thing that they could chop around and do all sorts of stuff. So you get any number of reasons that are pretty valid for people kind of distributing. Sometimes you also have someone that distributes back to themselves, which is they say, I've been self custodying, what is like now millions of dollars. And maybe I still want to self custody a bunch of it, but maybe I don't want to self custody all of that. And so you get kind of potentially selling into ETFs or treasury companies that then that same individual or group continues to hold just in a different form, which you can potentially give them kind of different types of liquidity access and stuff like that. And so I do think what's different with this cycle is that you do have, I mean, obviously the ETFs and the treasury companies present new opportunities for the types of selling and distribution that can occur. But I think this is part of a broader kind of pattern that happens, and I think will continue to happen in every major bull cycle. It's kind of part of that natural distribution process, and that's also why I tend to be on the bearish side of bullish all the time, which is you people keep saying things like, it's going to be like there's going to be a shortage of coins. There's all this buying pressure, and there's so few coins on exchanges or so few coins XYZ. But the variable that always surprised people for some reason is that when you do go up multiple times, you get selling into that. And I think we've entered the phase, and we're going to continue to be in the phase where it's not new mining supply that really kind of impacts price. It's the question is, at what price can you unlock, tightly held coins or previously tightly held coins to get them circulating. And so you have all the different demand sides, liquidity, regulatory changes, perceptions of the asset, all that type of stuff is on the demand side, and the supply side is basically either, for the most part, it's older holders selling into strength and liquidity. That's the most common, and then in rare moments you get these longer term holders selling into fear. So, for example, that kind of bottom in 2018, you had a rare OG selling into weakness moment. There are a couple of moments like that can happen as well.
The bear whale.
Yeah, you get kind of capitulations, but for the most part, it's older holders selling into periods of strength, and distributing the coins.
All right.
I do just thought of one kind of random thing. I did like a line on Twitter. Someone said who was kind of defending the early holders selling, because we have these line, never sell your Bitcoin and things like that, which they're fun taglines, and I get there's truth to them, and it is good to instill that you're saying, hey, people, this is a long-term asset. Hold it for the long term is probably for your benefit. But I did like someone had a quip that was like, don't get mad at the OGs doing what you yourself plan to do in 5 or 10 years.
Mm-hmm.
So there's no such thing as like the supply of Bitcoin. It doesn't run out. This is a market. There's buyers and sellers. New sellers emerge as price changes, as people's information and life situations change. So that is how markets work.
It's like people used to get super excited when coins on exchange. They'd watch this metric: coins on exchanges were dropping, and the available supply was so much lower, and it's there's going to be a supply shock. But people can just put more coins on exchange whenever they want. So that was just always a funny one. Okay, let's talk a minute about the treasury company space. Strategy released another preferred called Stream, and Strive released its first preferred called SATA this week. It has been a very tough market, to say the least, for the Bitcoin treasury companies, especially the newer Bitcoin treasury companies, but Strategy has not been left out of the pain over the past few months either. Lyn, I'd love to get your take on what's happened with price on these Bitcoin treasury companies, and if this is a thesis that really only belongs to one or just a small handful of companies to run and sustain, or is there a place for new entrants as we've seen attempted over the past year or so?
Yeah, it's a good set of questions. And it's funny how fast these things can change. So a lot of this is not surprising. I guess the part that surprised me a little bit is how quickly things can change in like a few months. Back in like June, MetaPlanet was touching an 8x market multiple to net asset value. And then just a handful of months later, it's like bouncing, at or around one. And so at the time, I was like, well, I wouldn't buy it at this multiple. But if it came down lower, I'd be interested. If you would have asked me at that time, will it be like one-ish in just a handful of months? I'd be like, no, I expect it to be lower, but I wouldn't have guessed that it'd be one. Maybe I'd be like two or 3 or 1.5 or whatever the number is. Same thing with strategy. I tend to get, whenever it's the kind of the brief times is hit like 3 times MNAV. You generally see at the same time that Twitter's like very euphoric about it, saying, why couldn't it go to 5? Why couldn't it go to 10? Why couldn't it, this is actually what the MNAV should be. And I tend to get nervous around those periods. I tend to get, more comfortable when it's like, a firmly sub 2 MNAV. But again, if you would have asked me, would it go all the way down to 1.2 ish MNAV by this point? It's kind of the go maybe quicker than I would have guessed. Even though I think that it's in a debate with Andy Constant, I mentioned that my estimate range for an appropriate MNAV is something like 1.2 to 1.8 for them. So we're kind of currently at the bottom end of that range. We could certainly go lower. My general view is that a successful treasury company, if you're a pure play, meaning you're not just a company with cash flows that happens to stack Bitcoin, I think the market for that is endless, basically.
Yep.
If you're kind of known as a treasury company and you have thin operations and the main thing you do is stack Bitcoin, generally speaking, you want to be the number one or number two in your market, depending on how big that market is. Because if you're an also ran, that gets challenging. So, and market in this phase is basically what the currency market or the capital market you operate in. Or sometimes that could be modified by a company that's willing to operate a little bit differently. Maybe one company says we'll never buy back shares. Another company says we absolutely will buy back shares if the conditions warrant. So you can have kind of different. You can have ones that are perceived as more aggressive or more defensive, that could kind of give you some wiggle room in terms of what position you could be in the market. But where I get nervous is that long tail of companies where they're not necessarily doing a ton different, and they're not the most liquid and largest and safest, because there are liquidity network effects at play. So
Mhm.
I think there is a market to have treasury-focused companies in the major capital markets of the world where regulators are fine with it. But beyond that, I think you generally want to look at companies that have operations as well, or obviously just holding Bitcoin and letting that do its work.
Yeah. What do you think about these new preferreds in particular? I haven't looked into them, so I don't know if you have either. Have you had a chance to see how these are structured, or what kind of markets Sailor's focusing on here with the stream preferred?
Not super closely. I mean, I see that they launched that Euro offering, which makes sense. That's a very big, it's the largest treasury company entering, what is other than China, the second biggest currency market out there. And so I think that makes sense. The size is modest relative to MicroStrategy's overall size, but I
Yep.
think it's a step that makes sense. I haven't strongly looked into the other one yet. But it's a general thing of you generally see the largest ones. They generally have market access that the other ones don't. It's kind of there is a benefit here from being at scale.
Yep.
You can absorb the cost and complexity, and you have the liquidity to be able to offer things like this.
Yep. John, anything on the topic?
Since we're talking treasuries, maybe we just highlight as a news item, Strive announced SATA, which is their preferred. So there's another US dollar preferred in the market. And I think this is aligned with the thesis that there will, my thesis personally, anyone's entitled to their own view, of course, but I think there will be successful Bitcoin treasury companies over the long term. It's up for debate how many of them there will be in any given jurisdiction, which financial products that they offer will be the most successful. Will some of them blow up for some sort of reason? Of course, all these things are good questions to ask. But Strive announced SATA, which is a preferred. They announced it at an $80 price to entice investors to come in on the IPO of that instrument. And I believe it's a 12% coupon. So I think it's just interesting to see competition, I guess you could call it, from issuers in the Bitcoin treasury company space for issuers of this, what's now being called digital credit. So Strive certainly seems like an entity that's in it for the long run. So they now have their SATA security perpetual preferred out there as well.
Okay, and that's different from strategies in a couple of inputs. Basically, it's like the price that they're targeting to hold it at, and the coupon, which I think strategy is 10%.
Yeah,
12%.
If my memory is correct, Strategy offered STRC at a $90 like initial offering price, and then it launched trading around there. And they had the guidance that they were going to try to get it to trade at $100. And they announced it either with a 10% coupon or close to there. So Strive is doing something similar, but it seems like they're trying to make it a little bit even more enticing, which they probably had to do because they're a newer company. They don't have as much Bitcoin. They don't have the track record of Strategy. So I think it does make sense where Strategy started their offering versus where Strive did. But yeah, interesting to see another player get to that point of offering the perpetual preferreds.
Yeah, I think the first non-strategy company to IPO a preferred, right? As far as I know.
I think so. I think Metaplanet has been working on it for a while, but as far as I know, they haven't done it yet. So yeah, maybe there's a small one out there that hasn't reached the news, but as far as I know, yeah, it would be.
Okay. Quick hit here. France is pushing unrealized gains on Bitcoin. French MPs have voted to advance a proposal replacing France's property wealth tax with a broader levy on unproductive wealth. This would include assets like Bitcoin, jewelry, art, yachts, property, and other luxury items. The reform, still subject to parliamentary review, would apply a flat 1% annual rate, even if the assets aren't sold. Supporters say it will push capital toward productive investments, while critics warn it could punish savers, complicate valuations, and revive old political divides. Yeah, this has been tossed around. Who was it? Was it Elizabeth Warren? I think during her anti-crypto army days, talked about floated that idea about unrealized capital gains tax on Bitcoin. Yeah. So what is the goal here besides to punish the rich? Are they? Let me ask you this, Lyn. Do you think this will work? Like, do you think this a policy of unrealized capital gains would accomplish? And we do know what they were trying to do. It's stated here. Push capital toward productive investments because they consider hoarded luxury items to be unproductive. What do you think about that?
The short answer is no. I mean, every kind of country has a certain dial where they're taxing, and then it's like, well, how much will be taxed by the working middle class? How much will be taxed by the wealthy? There's a dials that they can adjust. Generally speaking, when you get into like unrealized gain, like taxing unrealized gains or just wealth in general, you get into a lot of issues. Kind of like how income tax. The trouble with it is it makes you have to surveil everyone's income. And the problem with the wealth tax, you have to surveil everyone's wealth. And you start to, depending on how much you dial it up, you start to give an incentive for entities to leave. And the more attractive the location is, the more likely they're willing to put up with some of this type of things. And also, the more onerous the exit policies are. People kind of do the cost benefit analysis, which risks a area getting into that trap where not a lot of people want to be there, but you're kind of relying on traps and force to keep capital there.
Yep.
And I obviously I would disagree that Bitcoin is unproductive wealth, and it's not luxury wealth. It's categorically different. And I think one of the things we've talked about a lot in the Bitcoin space is when you do monetize things of utility, that actually ends up being destructive. If you store your wealth in extra real estate, for example, you drive up the real estate prices of people who just want it to live in. Things that are they're basically treating it like a consumer durable. The most important consumer durable that someone has, the shelter around themselves and their family. And so if you drive that up, because if money's weak, and Jeff Booth has made this point, if money's weak, people use, it monetizes other things, and people look out for things that are scarce, and they monetize that instead. So if money's weak, they monetize real estate, and they try to attach a fiat currency short to it. I would say that's unproductive. It's good to have a productive, like as a a non-utility or low utility store of value. Something like gold, where 90+% of it is mostly store of value or display of value, and a very small percentage of its of its use is for high industry. And Bitcoin's in a even more focused boat, which is that it's almost entirely a monetary good. Now it does have these database attributes that are obviously controversial at times. You can do there are non-monetary things you can do with Bitcoin, but the vast majority of its use case is monetary. And so I generally am of the view that monetizing things that are kind of designed or just happen to be have amazing monetary properties, things like gold or Bitcoin, that's the kind of the best place for society where kind of excess value could be stored until it's ready to be deployed into other things, versus quote unquote productive investments, things like storing money in utility items, therefore impacting those. A lot of these types of things, even when they have good intentions, it often just doesn't work the way people think. It's not like you think, well, I could store Bitcoin, but I'm not going to do that, and so instead I'm going to go make productive loans to small businesses or something. That's not how capital allocation happens. And generally speaking, if there's something that they consider productive that's not getting a lot of capital, there's probably a reason for that. And so it's that kind of social engineering is hard to do correctly.
Such a great answer. And also, I think that the requirement to surveil income and wealth may not be such a big problem for them. So
They like that, yeah.
Yeah, they like that. They like that. All right,
And
John.
I think people should be. I'll just one more point. People should expect the state to push back on this. I mean, basically, they control a centralized ledger, whether it's the U.S., whether it's the euro area, whether it's all these other places. They control a centralized. It relies on obfuscation. They want to be able to spend without necessarily taxing the same amount, so they have to kind of base people as kind of invisibly and slowly as they can, do. Um, and threats against that they don't like. When people have ownership of their own money, they can't be debased, they can be made portable, they're going to try to attack it where they can. And one of the main things they can do is through taxes. It's harder to just go out and get everyone's Bitcoin. And even taxes are not always 100% enforceable, but the more frictions they can put on it, they do start to tweak the cost benefit analysis. I mean, that's also one of Swan's missions early on was, what was it, create 10 million Bitcoiners in the US. That's why these things are important. That's also why I put a lot of work into articles and eventually a book related to the subject, which is, it's not as simple as being a lone wolf that holds Bitcoin and doesn't care what happens around you, because if 99% of people think you're the bad one, or get kind of tuned into thinking, well, how dare this person store their money in a non-debasable way, we should kind of tax that unproductive wealth back or ban it or something like that, they can add considerable frictions. And so I think education is a really big part of making the lives of people easier that just want to do what's kind of what they view as a sensible thing to be doing, kind of trying to avoid debasement, save in useful things, and not kind of just pay the kind of the broader cost of bad policies elsewhere.
Well, you've certainly contributed to Bitcoin education in a very profound way. This is, one of them. This is kind of I would say, a culmination. You've put a lot of your work into, but also all of the podcasts that you've done, all the articles and the newsletters that you've written. And Broken Money has become my go-to recommendation to replace the Bitcoin standard. When somebody asks me, they really want to learn about Bitcoin. Like when they're ready and they really want to learn, they want to understand what money is and why Bitcoin's important. Broken Money is fantastic. So thanks, Lyn, for all your work, and thanks for joining us today.
I appreciate that.
Thanks, Lyn.
Appreciate you. All right. I'll let Lyn go and go ahead and wrap up the show with you, John. Lyn, you can go ahead and hop off if you want. We're just gonna shill Swan a little bit here.
Right. Have a good day. So I also didn't mean to cut off John at the end. I didn't realize we were right at the end, so I had one more ad. I didn't.
John. Yeah, sorry, John. Did you have another?
Let's just keep if I had it, it was nothing super important, and I think what we ended on was fantastic. So all good.
Okay, awesome.
Yeah.
Thanks
Great to
again,
see
Lyn.
you all.
All
See
right,
ya.
awesome. So thanks again, everyone, for joining us. Kind of that you've noticed maybe if you've been here the last couple of weeks and been watching the show this year, we've kind of changed the formats a couple of times and trying to figure out what works well for us and for everyone. And so we are now, John and I are co-hosting guests. So we're still staying focused on the week's news and seeing where the conversations take us. I think that was a perfect example of what we're hoping to do with the show moving forward, John.
Yeah, exactly. No, yeah, I think it was good. And we're obviously open to feedback on it. So if anyone has ideas for things they want to see us talk about, people they want us to talk to, hit us up. I think you know where to find us. And we'd love to hear from you.
All right. Hit us up here. You can find us at swan.com. We will help you build wealth. That's what we do is we create strong relationships with clients. John is part of the Swan Private team, and he can speak to this. John, what's it like working with your clients? And I know education is a part of what you do as well, big part of what you do.
Yeah, for sure. So when I describe it in a nutshell, I try to say it's like having a private banker or a wealth advisor, but for everything related to Bitcoin. That's the experience we're trying to deliver to our clients, and a lot of people are looking for that. While TradFi is coming along to a certain extent in a post ETF world, they are still super slow to embrace Bitcoin. I still get clients telling me how their advisor, is still spitting out a 60-40 portfolio from their internal model, and they say Bitcoin's too risky, or oh, maybe do 0.5% or something like that. And our clients are like, yeah, this is not the person that I want to talk to and get advice about Bitcoin from. So we offer an alternative. That's kind of the service element of Swan Private. And then obviously we have an entire platform of services and products that our clients can use as well.
We also have a great custody setup. We have a Swan Safe, which is if you want to leave your Bitcoin with Swan, I think we do it the right way. We're partner with BitGo and Backed and Equity Trust as regulated custodians for the actual keys. We also have built out Swan Guard, which is a SOC 2 Type 2 compliant. This is like institutional level certification. That basically monitors your account all the time to prevent scams and fraud from happening. And obviously deal with fraud all day, every day at Swan, as do all financial institutions, but particularly Bitcoin companies, as you can imagine. And we've built up some amazing tech and an amazing team that really protects your Bitcoin. We also have Swan Vault, which is our multi-signature kind of collaborative self-custody. And we actually have Lyn here talk about Swan Vault along with Adam Back. We've worked with Blockstream on this product. It is by far the easiest setup in the industry to create a multi-signature vault and to move your keys into self-custody, but you don't have to go it alone. Swan is there to help you out. We'll help you onboard and get everything set up. We're there to always support you whenever you have any questions or any issues. And this, in my opinion, is the best way for the vast majority of Bitcoin investors who are interested in self-custody to hold their Bitcoin. It's very safe. You have 2 keys that are distributed in different locations, and then you can manage a third key through your Swan account. So you could use one of your hardware keys and your Swan account key to send transactions for convenience. If you ever need to, you have full control over your coins with those 2 hardware devices. So check out Swan Vault. We also have IRAs, which I don't think we mentioned yet. Put some real Bitcoin into your retirement fund. And there's a great calculator here on the site to see how adding Bitcoin to your retirement portfolio could affect your portfolio value down the road. And you can play with all of the assumptions here. So yeah, check us out. We've got a lot of services for you to build Bitcoin wealth, and we're just continuing to grow and add more services as time goes on. So we'd love to partner with you to build generational wealth with Bitcoin. And we'll leave it there. Thanks to everyone, and hope you join us